The government wants to introduce a new tax charge when non-residents who sell a UK residential property make a profit. Until now, those non-residents have been exempt from tax. First of all, they want to raise tax, and I think they think that there have been large gains on properties, and non-residents until now have avoided paying tax on those profits. My point, though, is that will it raise as much as they hope? Because if you ever tax an activity, people tend to do less of that activity, and that means there is a risk that non-residents simply won't sell the properties. And what happens then? Estate agents lose out, solicitors, removal companies, all the people that make money from sales, they pay tax, they pay VAT, so it may not raise that much. Secondly, there's political expediency. Clearly, it is a vote winner to make non-residents pay the same amount of tax as UK people. Finally, in London, where probably most of the non-residents are buying property, we've seen huge price rises in London, and I think the government thinks that this might depress demand. That may keep prices down for the rest of the population. This change is going to affect non-resident owners of residential property, but it's not just individuals. It's going to apply to companies, non-resident trustees, and partnerships. And it's going to apply to all property, all residential property of any value, and it doesn't matter whether it's rented out or whether it is occupied by the owners or left empty. This is a very big change for international individuals because until now they have been exempt from capital gains tax when they sell UK property. Now, the change brings the UK really in line with most of the other G20 countries, but the question is this the slippery slope maybe to imposing capital gains tax on non-residents on other assets? It might start with residential property, it could end up with commercial property, and ultimately it could be all assets. Last year, the government introduced a whole set of rules to basically penalise companies that own residential property, high-value properties. And one of the elements of that new regime was to have a capital gains tax charge for non-resident companies that own property. It only applied to properties above £2 million and only if they were used by the family. Now, those non-resident companies are going to be caught by the new regime. So, in my view, you've got two regimes doing exactly the same job. One of them is redundant. I don't think it's going to be the new one, it's the old one, so I think it should be abolished. These new rules are only going to apply where the property is sold by the non-resident. And if you have a non-resident company selling the property, sure, it will pay tax. But if the owner of the company sells the shares, strangely, either under the rules brought in last year or these new proposed rules, there will be no tax. So you have a strange situation where if the company itself is sold, there'll be no tax at all. This consultation is really intended only to affect non-residents, but it doesn't. And I'll tell you why. Because there is a rule that says that if you sell your main residence, it's exempt from capital gains tax. That applies to you and me. Now, if you've got two or more properties, you are allowed to choose which of them is your main residence. Now, understandably, the government is concerned that if they are trying to impose capital gains tax on, let's say, a Saudi who owns a property here, well, if that Saudi was allowed to choose between his Saudi property and his London property, he will choose his London property to be his main residence. That way, he would avoid capital gains tax. And so the government are proposing that nobody will be allowed to make an election anymore where they have two or more homes. That's going to affect all of the UK residents that own two or more properties. So if I own a London flat and a little place in the country, I won't be able to make the choice anymore. In my view, this is going to have a huge effect on a lot of UK residents who are really not the subject of this consultation, and it's a major change that really is being brought in by the back door. I completely understand why you would not want non-residents to be able to avoid capital gains tax under the new charge just by making an election, but you don't have to remove it. There are other ways that you can do it without disturbing these well-known rules that apply to UK residents. So one example is you would simply not allow non-residents to make an election. That means that UK residents could still make the election. Alternatively, you might say that you can only make an election as between two UK properties, not between a UK property and a foreign property. And another method might be that you can only elect a property to be treated as your main residence if you've spent, say, 90 days there. Now, Most non-residents are not going to want to spend 90 days in their UK property because that risks making them resident. So effectively you achieve what you want without disturbing the existing rules. These new rules are going to apply to non-resident trusts. Now, at the moment, if a trust has a beneficiary who lives in the property as their main residence, then the trustees can avoid capital gains tax under the main residence exemption. Now, the consultation paper is silent on whether that rule will continue where the non-resident trustee owns the property, but it is occupied by a beneficiary for whom it's their main residence. In our view, the rules ought to carry on as they are, but the paper is simply silent on it. The proposals were announced in autumn 2013. There'll be a year or so of consultation and discussion, and they're expected to come in April 2015. Now, we at Mishcon de Reya, we've been busy lobbying. We have myself and one of my partners are on committees that are speaking to the Inland Revenue, trying to make the rules work. We know we can't change the policy, but I genuinely think that the Inland Revenue have not understood some of the intricacies and the practicalities of implementing this in a sensible and a fair way.